Let's start this off by looking at just a quick example of the difference between balance and equity. It's really quite simple. To demonstrate this, I'm going to get into a trade right now. I'm going to click on the buy button. And you can see right now I'm at negative $1.80. So let's look over here. Obviously, the account balance is not changing or fluctuating because I haven't closed any trades in profit or loss. But if you look at the equity is constantly changing. That's because the equity is simply the balance, which isn't moving, minus your current open trades. So your equity could be more than your balance if your trades are positive, or less than your balance, like in this case, when your trades are negative. Your account equity continuously fluctuates with the current market prices as long as you have any open positions. Basically, equity shows the, quote, temporary value of your account at the current time. It will not become the real value of your account or balance in your account until you close all of your trades. So for example, if I were to close this trade right now, I would lose 90 cents or 30 cents now. I clicked on the X and you can see it went down 30 cents from what it was before. And now you can see that since I don't have any open trades, the balance and the equity are the exact same number. So the difference between balance and equity is simple. The balance reflects your profit or loss from closed positions. The equity reflects the real-time calculation of your profit or loss. The equity takes into account both open and closed positions. Let's move on and learn about the concept of free margin now. What does free margin mean? Free margin can be classified as either used or free. It's the equity in a trader's account that is not tied up in margin for current open positions. Free margin is also known as usable margin because it's margin that you can use. Free margin can be thought of as two things. Number one, the amount available to open new positions, and number two, the amount that existing positions can move against you before you receive a margin call or stop out, which is not good. Basically, free margin is the breathing room that you have or the ability to get into new trades. We'll talk more about what margin call or stop out are later on in more detail, but if you don't have any free margin, your broker will basically close all your open trades and the negative open trades will become losses. And we definitely don't want that, right? Which is why it's so important to learn all this. We already talked about used margin, which is the total of all required margin from all open positions. Free margin is the difference between equity and used margin. If you have open trades, floating profits increase equity, which increases free margin. Floating losses decrease equity, which decreases free margin. You don't need to know how to calculate this because as you can see, it's automatically calculated here in your MT4 platform. But I want to show you how it's calculated so that you understand what the numbers mean and so that you can be aware of it. Let's look at an example. Let's say you open an account and you deposit $1,000. Your balance would be $1,000, right? Then you open a long USD CAD position at a 0.1 lot size or 10,000 units. The first step is to calculate the required margin. If the required margin is 3% and 10,000 units of USD CHF is equal to $10,000, then 3% of $10,000 is $300. So that's your required margin. Now we'll calculate the used margin. Since we're just in one trade, the used margin will be the same as the required margin. Remember, used margin is the sum of all of the required margins of all open trades. Now, in the third step, we'll calculate the equity. Let's say the opening trade is currently sitting at a $10 profit. That means your equity is your balance of $1,000 plus your $10 of floating profit, which equals an equity of $1,010. The final step is to calculate the free margin. Since we know the equity, we can now calculate the free margin. Free margin is equity minus the used margin. So free margin is $1,010, which is the equity, minus $300, which was the used margin, which gives us $710 of free margin, like you can see at the top here. If you feel lost, don't worry. You can go back and watch these videos again on margin. But once you start trading and seeing how it works, it will all make sense. And like I said, the good news is that the MT4 platform is going to automatically calculate this for you and automatically be dynamically updating these numbers like free margin, used margin, balance, equity, all these numbers for you. So you definitely don't need to calculate these, but it's important to understand how they are calculated. In the next section, we're going to talk about margin level.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.